Hey guys, this is a quick video on contraction state. I haven't spoken about that, but when you're using the moving average, you got a 20 to 50 or even a 200. Your buying opportunities actually need to come within the contraction state. And I'm going to show you in a chart what the contraction state looks like and what the expansion state looks like. We don't want to buy in an expansion state. If anything, we want to sell in an expansion state, but we don't want to buy. All right, so I'm gonna draw a a red arrow showing the contraction state. All right, you see this? Okay, this area is contraction. So let's zoom this out more so we have a better picture. All right. Okay, here we go. Okay, you see you have the green one. This is my whole moving average. Is a 20-day, and then this orange line is my 50 period moving average, and then this red line that you see right here is my 20 moving average. Okay, and then below right here, this green line down here or neon is that's the 200-day. Okay, everything price was above the this 50, and it was below the 20. Okay, well, in this state is your best opportunity to actually buy. All right, you buy in this state right here because it's contracted. All right, once you buy, of course, you want to set your stop loss below the bar that it surpasses. Let me explain. You see this? This is considered a red candle. All right, and then you have this green candle. The green candle surpassed this red candle, so we can look for buying opportunities. Okay, we immediately set our stop loss below the red candle that was just either engulfed or eliminated. All right, this is in the contraction state. It's a narrow little channel. All right, now watch what price do. Price pushes up and it breaks out of the narrow state. This is another buying opportunity right here as well. You had a red bar. You had a green bar that eliminated the red bar. You can buy here. You set a stop loss. Where? Right here. Okay. So if you want to enter again, you can. All right. Look at what happens. Price just continues to move. It relatively stays above this moving average, and that's what we want. But then it breaks below. Okay, this area, this is the area where people will start taking profit. Okay, they up pretty good. They bought in the narrow state, but now it's in the wide state. Why? Look at this moving averages right here. Look at these moving averages. It's a lot of space. Okay, you have a lot of space in between the space. Okay, so when something gets wide, you need to become worried. That means, well, not worried, but you need to be more attentive. You need to say, hey, I need to be looking for exits. I need to be looking for opportunities to secure my profit. So because in the wider state, you're not going to be buying anymore. You're going to be looking for, like I said, opportunities to sell. In a narrow state, you're going to be looking for opportunities to buy. And just keep that simple rule, okay? So we're selling. We did all the buying here. We're selling here because why? The moving averages are not, the price is away from the moving averages. Okay. Now this whole moving average is a little different. It's not a lagging indicator, but these are. And further you move away from it, it suggests that eventually it's going to either close the gap to come down here and touch it, or price is going to eventually start correcting because price wants to stay around the moving averages as long as possible. They're like lovers. They just like cardinals. They or robins. They have a mate that they love to be around. Okay, so this is what you can look through the chart. You can always find these states throughout. Of course, this is the hourly chart. All right. Look at this state right here as it moved up. See, the moving averages got away. What did price do? It started to push back down to come into this area. Okay. Look what price did. Price came down here, and look where the moving average was at above. What did price do? It had to fight back to get to a state of union. It likes to be around. It don't like to stay away. Okay. So moving averages serves as, like I said before, support, resistance, but also helps you identify zones, get a feel for where any currency pair, any stock or whatnot wants to go. Let's look at maybe Facebook or something. I don't really trade it that much, but everybody's familiar with it. So, all right, this is a perfect one. Didn't even know it, but look what's happening. We're in a what? We're in a wide state. You should not be buying. Okay. If everybody knows what the whole moving average is, this is a good opportunity, even though it's still further away, but it's a good opportunity right here. All right. You had a red bar. What happened? You either got in right here once it crossed over this moving average, or you can wait for this red bar to be eliminated by green, where you put your stop loss right below. All right, guys. Don't make this difficult. Put the stop loss right there, right below. Okay, you're in profit now because it surpassed, eliminated that red. Whereas we got another one right here, red bar, a green bar got what? Eliminated. Put your stop loss where? Below. Put a stop loss right here. Right? Another buying opportunity. Boom. Okay. But we have to what? Be mindful because now we're in a wide state here. So you say, well, Eric, you may have contradicted yourself. You say in a narrow state, we buy, we don't buy in a wide state. Yes, stick with those rules if you're looking for that particular type of setup. What I'm saying is that if something is in a narrow state, you can now look to say, hey, I think I have some buying opportunities in there. All right. There are going to be times where you're in a wide state and it makes sense to buy, such as a bar eliminates another color. If a red eliminates a green or a green eliminates a red, you still can buy. You can set your stop loss appropriately, and you're good to go. All right. So just give you different strategies to see how things work. So see this little tight range. It's tight in here. Okay, and then we start to break away. So this is a good example. Could be what? Selling opportunities. Okay, you're looking for what? You're either looking for a green to get eliminated by a red, or a red to get eliminated by a green. So, did I say that right? I mean, you're looking for a green to be eliminated by a red and a red to be eliminated by a green. So we're looking at this right here. We're not making any trades until it's eliminated. So what happens? This green bar got eliminated by this red. So then when you put your stop loss right here, right? And then look what it's in a narrow state. And then we break to the downside. It gets what? Further away. So what do we say? We need to start looking for what? Opportunities to take profit because it's getting further away. Right? Same up here. It's starting to get further away. People are going to start taking profits. Right? And then once we get up in this area, we may start to see a descent to the downside. Okay. So I hope that helps a little bit to help you understand narrow state, wide state, and bar eliminations. All right. So I hope that video helped you guys. All right. Y'all have a nice one. Happy trading, guys. Have a great week.